Hey, we have Omkar Tanksale of Access Securities now joining us to take this discussion forward. Omkar, hi, good afternoon. Thanks a lot for joining us. Omkar, let's start with the one that we discussed today, HCL Tech. What did you make of the market's reaction and the fact that while it's got valuation comfort, it's still been a bit of an underperformer?
Good afternoon and thank you, sir, for the opportunity. I see HCL Tech was reported a tepid set of results because of the quite weaker execution as compared to peers. Because if you have seen properly, the revenue growth momentum have came because of the product and platform business that is largely volatile in nature. But IT services has grew only 2.1%, whereas in other peers like they has to report they have reported well as TCS has outperformed the HCL Tech when they have strong deal pipeline at the momentum. The major worry from my side is the pressure is building up on the margins, and previously they have guided for around 34,000 to 35,000 of the people are hiring. With the rising inflated attrition levels at around 20%. They are still now saying that they are going to hire at 30,000, which likely to impact more on the side. But they have said on the previous con call they are going to manage it with the higher utilization. But I believe that has to be quite lower in terms of guided range. Even the margins are likely to remain under pressure, according to me. So I believe on a demand scenario has also been looking likely to be slowing down, whether from North America or whether largely from the European side. The major growth that they have reported for this quarter mainly from the ER&D and the PNP business.
Okay, that's on HCL Tech. Do you have
Yes.
coverage on Mindtree? We are expecting numbers today.
Yes. Mindtree, we are expecting around 5% of the CC growth, and in rupee terms, we are expecting 6.5% of the revenue growth. The deal pipeline we are expecting likely to be remain strong, whereas in we can see some margins pressure aided mainly because of the wage hikes, the travel cost, and higher on-site expenses and subcontracting cost, which we are expecting around 70 basis point of the EBITDA margins are likely to be remain tepid or contracting by 70 basis points.
Omkar, what do you like in the space now? What are your top ideas?
My top ideas are mainly the Infosys and the TechM, because I believe the Infi has got a strong chance of, they have surpasses the growth of the TCS in 3 years in a row and likely to report a stronger revenue growth in 1Q and so on as well. So being cheaper in the valuation as compared to TCS, and they have also demonstrated a very good execution level, because in current scenario hiring the people, training them and deploying to the project and get is a task that one should also consider. With 30% attrition levels, that people are leaving the jobs, so deploying them has become the key issue, whereas I believe Infi has become a great demonstrated a great in terms of execution. So, and TechM is another one that I feel better because of the 5G rollout, and not only on the communication vertical, but on the enterprise side also they have demonstrated well.
Okay.
In mid caps, I believe Persistent will likely to grow much better.
Okay, Omkar, we are actually losing that line, but we got the gist of what you're saying. Tech Mahindra, Infosys, and Persistent Systems in the broader market, in the mid-cap IT. Persistent Systems actually is something which a lot of people believe after the correction maybe is looking worthy of a second look once again. But let's do one thing. We'll take a break.